Hello, my name is Michael Ginsburg, and I want to share an update on the first quarter of 2026 with you. I've received some calls from clients as well as a number of prospective clients about their concerns regarding market volatility, concerns that different investments are way overpriced in the market, the impact of inflation on their retirement, as well as global events, and how all of this will affect their retirement income, whether they're currently in retirement or soon to be. For my clients, I use a structured philosophy called Lifetime Wealth Blueprint. I have a 3-bucket approach. Bucket number 1 is guaranteed. There's no market volatility and you have no market losses in bucket 1. Bucket 2 is a growth bucket. It's designed to grow your portfolio for the future and to help protect against inflation and unexpected expenses. And bucket number 3 generates reliable and predictable income without touching the principal. So for do-it-yourselfers, most of them for bucket number 1, they use bonds. So let's take a look how bonds, or the safe investment, had performed this past quarter. So this past quarter, the S&P U.S. Aggregate Bond Index generated a whopping 0.92%. That's right, a whopping barely 1% return. But it's worse than that. For the first quarter, inflation ran at 3.3%, meaning that your real return on the safe investment was a loss of 2.38% for the first quarter. That's not exactly what I would call a great return for a safe investment. Now, so how did my clients perform in Q1 for their safe investments? Well, let's take a look at one of my clients. This couple just had their contract issued on January 2nd of 2026, meaning right at the beginning of the year. They opened this contract with $130,500. Their balance on April 17th was $138,664, or a year-to-date gain of $8,164, or a year-to-date percentage gain of 6.25%. All 4 of the indexes that I used in their contract were up for the year. Now, also for do-it-yourselfers, they generally rely on a rule called the 4% rule. Well, Morningstar, the research organization, every year researches and sees, is the 4% rule legitimate, or what is the actual safe percentage of the withdrawal? Well, for 2026, they found that the safe withdrawal was actually 3.9%. While that's under 4%, it's certainly better than the 3.7% for 2025. But as a recovering attorney, I am always concerned about small print. So what does the small print of the 4% rule say? The 4% rule says that you could withdraw, in this case, 3.9%, and you have a 90% chance that your money will last 30 years. Now, I don't know about you, but I certainly wouldn't get on an airplane if I only had a 90% chance of reaching my destination. Now, if you are a do-it-yourselfer and you're not a client yet, and you are concerned about a 90% chance of reaching your destination, I'd love to discuss your retirement income plan versus what I do for my clients utilizing my Lifetime Wealth Blueprint philosophy, and I'd love to chat with you. Use the link below and schedule a time for us to chat. Thank you very much and have a great day.